I'm just trying to understand if the optimism we're seeing is something that could last, because it's one set of data. The backdrop of tariffs still remain. This morning, news coming in that Trump wants to apply tariffs on movies made outside the United States.
Good morning. It's always great to join. And I've always been more of a glass half full person throughout all of this uncertainty that we have. And I think a lot of the reversal that we've seen over the past couple of weeks, I mean, we've just had 9 consecutive up days on the S&P 500. First time that has happened since November of 2004. So there's a lot of, I think, reversal, hope that we're going to start to strike trade deals, that the worst left tail scenarios are off the table. There's going to be some key events this week that we have to pay attention to. Number one, the S&P 500 is approaching some key technical resistance levels. So can it hold its own? Can it break through some of those levels? We're going to see. And I think the most important detail is going to be the Fed meeting. And so on Wednesday, we'll hear from Powell. And I think that Powell is going to strike more of a hawkish tone. I think interest rate pricing, the expectation for cuts is a little bit ahead of itself, given that the data continues to hold up fairly well. We're seeing decent earnings, much better than feared across the S&P 500 companies as well. So I think amid that backdrop, the Fed's going to be very reticent to try and broadcast more cuts that are coming up. So I think we're going to have some adjustments, but I do think that dips are viable, and I would wait for dips to start to put more capital to work in this market.